Hello everyone and welcome back to Explain the Charts, your trusted source for comprehensive market analysis. Today, we're putting Microsoft, ticker symbol Microsoft, under the microscope for an in-depth look at its recent performance and future outlook on September 16, 2025. The stock is currently trading around $513.95, reflecting a slight dip today, but showing strong resilience after some significant volatility in the past weeks. Let's start by contextualizing MSFT's current position with some major news affecting the tech sector and Microsoft specifically, highlighting the interplay between macro and micro factors. The most immediate headwinds stem from a weaker-than-expected August jobs report in the U.S., signaling broader economic softening, and the Trump administration's announcement of new tariffs on chips manufactured outside the country. These tariffs are particularly impactful for Microsoft, as it heavily relies on overseas manufactured semiconductors for its burgeoning data center and AI infrastructure, suggesting increased operational costs and potential margin pressure. However, it's not all bearish news. Microsoft recently reported a monumental $46.7 billion in cloud revenue for fiscal year 2025, marking a staggering 27% year-over-year increase. This robust growth is largely driven by strong AI integration across its core products and soaring demand for Azure services, underscoring the company's powerful fundamental tailwind. This blend of strong company-specific performance and challenging macroeconomic and policy landscapes creates a fascinating dynamic for MSFT's stock price. The market is clearly weighing these conflicting forces, leading to periods of both aggressive buying and sharp profit-taking. Now, let's turn our attention to the daily chart to see how these events have manifested in price action over the past year and a half. Looking at the one-day chart, we can observe a clear and consistent long-term uptrend, a testament to Microsoft's underlying business strength and innovation. Notice the sharp decline around late July 2025, after peaking at its 52-week high of $555.45 on July 31st. The stock closed significantly lower at $533.50. This substantial one-day correction indicates strong profit-taking at those elevated levels, potentially triggered by early signs of market jitters or valuation concerns. The next notable drop occurred on September 5th, where the price opened at $509.07 and closed at $495, correlating directly with the news of the weak jobs report and new semiconductor tariffs. This particular sell-off pushed Microsoft below its 50-day moving average, a key technical indicator, suggesting a shift in medium-term sentiment towards caution. However, the stock quickly found solid support around the $495 level and has since initiated a recovery, closing yesterday, September 15th, at $515.36. This quick bounce demonstrates the underlying strength and demand for Microsoft shares, indicating that dips are being viewed as buying opportunities by many investors. The current price is also well above the 200-day moving average of $445.65, firmly reinforcing the long-term bullish trend. We can identify initial support around the $495 to $500 area, a critical zone where buyers stepped in after the tariff news, and significant resistance at the $517 to $520 region. Switching to the one-hour chart, we can gain a more detailed perspective on the price action from late August through early September, especially around the recent market events. Observe the initial attempts at consolidation that emerged after the steep drop on September 5th. The hourly chart reveals a fairly tight trading range, with immediate resistance forming around the $509 to $510 level. This level was tested multiple times but held firm, indicating a ceiling in the immediate aftermath of the news. Conversely, strong support was established near $495 to $498, preventing further declines and signaling a floor for short-term traders. A decisive break above $510 on this time frame would be a strong signal for renewed short-term bullish momentum, potentially targeting higher resistance levels. On the other hand, a sustained move below $495, especially on increased volume, would raise significant concerns and could see the price testing further support levels around $480 to $485 established earlier in the year. The battle between buyers and sellers is clearly defined within this hourly range. Let's get even more granular with the 15-minute chart, focusing on an interesting and highly volatile period, the rapid rally on September 11th, which shows how quickly sentiment can turn. Between 21:17 Universal Time Coordinated and 21:47 Universal Time Coordinated on September 11th, Microsoft experienced a dramatic and rapid surge. Price catapulted from an open of $501.18 to a close of $513.51 in just 3 15-minute candles, accompanied by significant buying volume. This impulsive move suggests strong institutional buying or a major positive catalyst that might have been simmering beneath the surface, pushing the stock through prior resistance levels with conviction. Such sharp rallies attract momentum traders and can indicate a shift in short-term sentiment, often driven by algorithmic trading. The quick retracement to $510.30 after hitting an intraday high of $514.75 shows some immediate profit-taking, which is typical for such rapid moves. However, the overall higher close maintains the upward trajectory on the very short term. This intense price action on shorter timeframes highlights the importance of real-time monitoring for day traders to identify swift entry and exit points. It also serves as a reminder that volatility can create both substantial opportunities and significant risks. Returning to the daily chart, let's synthesize our observations and discuss the overarching bullish and bearish arguments for Microsoft, along with key price levels. The long-term outlook for Microsoft remains unequivocally bullish, primarily fueled by its dominant position in cloud computing through Azure and its strategic leadership in the rapidly expanding AI sector. Continued innovation and integration of AI into its vast product ecosystem are expected to drive consistent revenue and earnings growth, making it a cornerstone for growth investors. The current P/E ratio of 37.78, while appearing high by traditional metrics, is often justified by tech companies with such strong, enduring growth prospects, as various financial analyses, including Forbes, suggest. This implies that investors are willing to pay a premium for future earnings potential. However, in the short to medium term, the bearish catalysts of a potential economic slowdown, exacerbated by weak jobs data and increased operational costs from semiconductor tariffs, could exert notable downward pressure. These external factors could lead to further periods of consolidation, minor pullbacks, or even a deeper correction before the overarching bullish trend reasserts itself with full force. A key psychological and technical support level to watch for is $500. A sustained break below this could signal further weakness and trigger stop losses, potentially bringing the $495 support back into play. Conversely, a strong bounce from the $500 to $505 zone would confirm its importance as a robust support area, attracting new buyers. On the upside, immediate resistance can be found around the recent high of $517, which needs to be overcome convincingly to target higher levels. Beyond that, the July peak of $555.45 stands as a significant long-term resistance and a target for renewed bullish rallies. For active traders, looking for entry points around confirmed support, like the $500 to $505 zone, after a clear reversal signal on lower timeframes could be advantageous. Conversely, a decisive break below $495 with accompanying high volume would suggest strengthening bearish sentiment and warrants extreme caution, possibly targeting the $480 to $485 area as the next major support zone. Long-term investors, in contrast, should consider significant pullbacks as potential accumulation opportunities, especially given the company's solid fundamentals and future growth drivers in AI and cloud. However, all market participants, whether short-term or long-term, must prioritize strict risk management, including setting clear stop-loss orders around critical support levels to protect capital during volatile periods. To recap, the immediate key price levels for Microsoft are the support zone between $500 and $505 and overhead resistance at $517, followed by the all-time high of $555.45. A sustained push above $517 is highly likely in the short to medium term, perhaps with a 65 to 70% probability, especially if positive AI-related news continues to emerge and broader market sentiment recovers from current macroeconomic anxieties. This upward movement would be strongly reinforced by consistent high trading volumes on green candles, indicating strong buying conviction. Conversely, a break and sustained close below $500 has a lower, but still notable 30 to 35% likelihood in the short term, predominantly if U.S. economic data unexpectedly worsens further or the impacts of the new tariffs are more severe than currently anticipated. This bearish scenario would be clearly signaled by persistent selling pressure accompanied by heavy volume, particularly on red candles, and a failure of price to recover quickly. Looking ahead, upcoming quarterly earnings reports for Microsoft and any major announcements regarding their AI initiatives will be absolutely crucial drivers, potentially acting as major inflection points for the stock's direction. Furthermore, investors must continue to monitor broader market sentiment, specifically global economic indicators, and any further policy changes on international trade, as these external factors can significantly influence MSFT's trajectory. Remember, while Microsoft's internal performance in cloud and AI is robust, external macroeconomic pressures can temporarily overshadow its strengths. Therefore, a balanced approach combining fundamental understanding with diligent technical analysis is essential for navigating this market. Thank you for joining Explain the Charts for this detailed analysis of Microsoft stock. We hope this in-depth look helps you make more informed trading and investing decisions. Remember to stay informed and manage your risks wisely.